Imagine buying a home with no paperwork, no middlemen, and no delays. Just a few clicks on a secure digital platform. That's the power of smart contracts. By automating and verifying transactions on the blockchain, smart contracts are revolutionizing real estate, cutting out traditional bottlenecks and boosting transparency. From instant property transfers to tamper-proof lease agreements, this technology is redefining how we buy, sell, and manage property. Today we will talk about how smart contracts are disrupting real estate. So before we start, make sure to hit the like button and subscribe to my channel. 1. Introduction. The traditional real estate bottleneck. The real estate industry, long considered one of the most stable and lucrative investment avenues, has historically been weighed down by inefficiencies. The buying and selling of property typically involve a labyrinth of intermediaries, brokers, escrow agents, lawyers, title companies, and notaries, each playing a crucial role in validating the transaction. While these intermediaries provide security, their involvement often leads to increased costs, prolonged timelines, and risks of human error or fraud. Moreover, the paper-heavy process and the need for manual verification steps slow down deals, sometimes dragging them out for months. This complexity presents a ripe opportunity for disruption, and that's where blockchain and smart contracts step in. By digitizing and automating key aspects of real estate transactions, smart contracts are transforming the industry into a faster, more transparent, and cost-effective ecosystem. 2. What are smart contracts and how do they work? Smart contracts are self-executing contracts with the terms of the agreement directly written into lines of code on a blockchain. Once deployed, these contracts automatically execute actions when predetermined conditions are met, without the need for third-party intervention. For instance, in a real estate deal, a smart contract might release funds to the seller and transfer digital property rights to the buyer once all required conditions, such as identity verification and mortgage approval, are validated on-chain, because they run on decentralized blockchains, typically Ethereum or other smart contract-compatible platforms like Solana or Polygon. These contracts are immutable and secure. This not only ensures that no party can tamper with the contract after it's been deployed, but also provides a transparent ledger of the entire transaction history. The decentralized, trustless nature of smart contracts is the key to their transformative potential in real estate. 3. Disintermediation, removing the middleman. One of the most profound disruptions smart contracts bring to real estate is the elimination, or at least the minimization, of intermediaries. Traditionally, each stakeholder in a property transaction introduces their own set of fees and timelines. Brokers, for example, may take 3% to 6% commission on sales. Escrow agents require time to hold and release funds. Title companies charge for verifying ownership history. With smart contracts, these roles can either be automated or rendered obsolete. A properly coded contract can handle escrow functions by holding funds in a decentralized wallet until preconditions are met. Blockchain-based title registries ensure ownership history is transparent and tamper-proof, eliminating the need for costly verification services. This not only slashes transaction costs but also democratizes access to real estate, particularly in underbanked regions where traditional services are limited or non-existent. 4. Tokenization of real estate assets. Another major innovation enabled by smart contracts is real estate tokenization, the process of converting physical property ownership into digital tokens on a blockchain. Each token represents a share in a property, allowing for fractional ownership. This means instead of needing hundreds of thousands of dollars to invest in real estate, individuals can now invest small amounts and still gain exposure to property markets. Tokenized real estate can be traded on secondary markets, much like stocks or cryptocurrencies, enhancing liquidity in an otherwise illiquid asset class. Smart contracts power these tokens, handling dividend distributions such as rent payments, ownership transfers, and compliance checks. This opens up new avenues for investors, especially younger, tech-savvy individuals and global participants who were previously locked out due to geographic or financial barriers. 5. Speed, efficiency, and 24/7 market access. Traditional real estate transactions can take weeks or even months to finalize, largely due to manual verifications, bank approvals, and legal processing. Smart contracts, on the other hand, operate in real time. A purchase agreement encoded into a smart contract can verify conditions, release payments, and update property ownership within minutes once all inputs are satisfied. Moreover, because blockchains operate globally and around the clock, there's no downtime, unlike banks or government offices that work within limited business hours. This always-on infrastructure allows real estate to function more like digital marketplaces, facilitating rapid deals between global buyers and sellers. In markets with fast-moving demand, such as short-term rentals or flipping opportunities, this speed provides a decisive advantage. 6. Enhancing transparency and trust. One of the primary barriers in global real estate is trust. Cross-border property deals are often fraught with risk, legal uncertainty, and opacity. Blockchain and smart contracts solve this by embedding transparency into the system. Every transaction, every change of ownership, and every update to the contract is logged on the blockchain, publicly viewable and immutable. This reduces the potential for fraud, such as double selling of a property or falsifying documents. Moreover, smart contracts can be programmed to require notarized digital identities, verified property listings, and regulatory compliance before executing. For investors, this builds a more trustworthy environment, where due diligence can be conducted efficiently without relying solely on third parties. Governments and institutions are beginning to recognize this potential, with countries like Sweden and Georgia piloting blockchain-based land registries. 7. Challenges and legal considerations. Despite their promise, smart contracts face several challenges in real estate adoption. Firstly, real estate laws vary significantly across jurisdictions, and many regions still require wet ink signatures or government-stamped documents for legal property transfers. Integrating these legacy requirements with blockchain systems is complex and often requires legal reform. Secondly, smart contracts are only as good as the code they're written in. Bugs or loopholes can lead to severe consequences, especially when handling large sums of money. There's also the question of legal recourse. What happens when a contract executes incorrectly? Unlike traditional contracts, smart contracts often lack built-in dispute resolution mechanisms. 8. The future of smart contract-driven real estate. The integration of smart contracts into real estate is still in its early stages, but the trajectory is clear. As legal frameworks catch up and blockchain infrastructure becomes more sophisticated, smart contracts are poised to become the backbone of property transactions. Startups like Proppy, Realt, and BrickBlock are already offering platforms that allow users to buy tokenized property with a few clicks. Governments are beginning to explore blockchain-based registries to streamline land titling. In the long term, we may see real estate ecosystems that are entirely digital, where buyers from around the world can co-own, lease, and manage properties without ever setting foot in a title office. Smart contracts will underpin everything from rent collection and maintenance scheduling to compliance enforcement and dispute resolution. While challenges remain, the disruption is already underway, and for an industry as valuable and entrenched as real estate, that's nothing short of revolutionary. If you like this video and would like to see more like it, please give it the thumbs up. Leave a comment and click the button to subscribe.